Welcome back, Outfunders. The markets are closed for December the 15th. And we did have a pretty interesting week, so let's go ahead and get going through that. I'm going to show off one thing a little bit later as well, or talk about something a little bit later as well. So let's get it going. We did have a little bit of a gap down on Monday. It wasn't crazy. Definitely just traded higher throughout the day, kind of steady, nice little flow to it. Pretty good day there. Nice little gap down on Tuesday and a little bit of a retest down, and then it kind of got going bullish as well. Kind of continued up, relatively at the same pace as we had on Monday. Wednesday, nice little gap up, nice little pump early on, pullback for a few hours. And then we got to the most important news event or the activity of the week, the Fed. The Fed o'clock, basically. You see this huge pumped pretty much into the end of the close there on Wednesday. So what was really going on, and we got CPI Tuesday morning. Basically everything on the inflation Tuesday morning was basically flat or in line with forecast, so it wasn't really a big deal. But the Fed on Wednesday, okay, no change on interest rate changes, right? It basically held. I think market was expecting 97% chance of hold going into Wednesday. Yep, so we got that. So nothing really any different there. But the reason why the market was so bullish is the Fed actually came out and admitted what the market has kind of been saying all along, at least as far as it comes in the way of the CME, Fed funds forecaster tool. And maybe we'll take a look at that a little bit later. But they basically said, hey, we're going to look to cut rates 3 times next year for a total of a 75 basis point cut throughout 2024. So really interesting because they've never made any mention about that, right? They've been kind of holding steady on, no, we're going to hold rates higher for longer, blah, blah, blah. They've said that pretty much every meeting or made that indication every meeting. And this time they actually did say that, we're going to look to cut. Now, when we got to the press conference, Jerome Powell basically had said everything we've kind of already known about, economic data or kind of all that stuff, right? All that stuff. So the market just kind of, held strong throughout the day on Wednesday, even into the close. A little bit of a pullback there in that last hour and then pumped right there towards the end of the day. But yeah, they didn't say anything that the market didn't already kind of think or know or price in or that kind of stuff. And so the Fed actually came around to that, and basically the market kind of took it as, well, we know your job better than you do. We're ahead of everything better than you are. So yeah, that's one reason why the market did so well there on Wednesday. Nice gap up there on Thursday. A little bit of a pullback there first couple hours, a little bit of a pump there midday. Then we got pullbacks, okay? Pretty good pullbacks here. It made sense that we did go higher over Wednesday. It was huge move there on Wednesday afternoon. We'll take a look at the IWM. This was like a 4% move there in the last 2 hours there on the IWM. But yeah, the SPY, a little bit more of a pullback day there on Thursday. Friday, nice little gap down, and then kind of just choppy throughout the day. A little bit of a hump, rollover, and then a little bit of a bullish trend to kind of end out the day. Now, one reason why it was so bearish there on Friday, we paid dividends. So if you adjust your chart for dividends, basically, yep, the chart was basically flat. So we paid a pretty good dividend there on the SPY. You expect, the Qs, IWM, DIA, RSP probably playing dividends there over the next week. So we will see what those charts kind of look like when they pay dividends, but that was a big reason why we did pretty good gap down there on Friday. So I want to quickly take a look here at the IWM. So like I mentioned, we had this huge move here to end out the day. We went up 4% in those final 2 hours. Even there on Thursday, I think was up like another 1% or so. Let me see if I can grab this. Up like another, let's see, where did we end? Right there. Up another 2.6% there on Thursday. Wednesday afternoon, Thursday was very strong there for the IWM. So yeah, very good day for the IWM. All right, let's take a look at sector rotation for the week. You can see the XLC kind of lagging behind there quite a bit to start the week, and even ended the week as the lowest performing sector or the most underperforming sector. Utilities also underperforming. They were doing pretty good there on Thursday, but man, Friday they got they got hit pretty good. They actually went pretty solidly bearish from midday Thursday all the way through the close there on Friday. So yeah, not really looking good there on utilities. Healthcare, staples also underperformed. Energy's kind of in line there with the market. You can see had a pretty good comeback, made a pretty good little comeback day there on Thursday because they were underperforming pretty good there on Tuesday, Wednesday. Outperformers for the week, tech. Tech kind of skirted by there a little bit on Friday. It was actually doing pretty good there for the first half of the week. Financials did very well. Discretionaries, industrials, materials, and look at the REITs. Ooh, buddy, I even made a little mention of that yesterday or Thursday in my quick little wrap up video. Yeah, REITs, they were screaming Wednesday and Thursday as yields were dropping. REITs, anything that was interest rate sensitive, those sectors did really well. Tesla did pretty good bounce there in the afternoon on Wednesday and Thursday on Tesla. So, if you want to take a look at cat, deer, those areas where, you get loans to buy things and that kind of stuff, those companies did really, really well. And that's one reason why you see financials also doing pretty good there as well. All right, take a look here at the VIX. Had a nice drop off there on Tuesday, but you see Wednesday, even though we were screaming bullish on Wednesday and even Thursday, well, we didn't continue to drop off there on the VIX. So we actually did get just below 12 intraday on some of these wicks there on the VIX. But if we take a look at the weekly, I'm going to zoom out here. You can see we have now gotten this week down to the levels just before the pandemic, kind of crash, the pre-pandemic high that we put in on the market. And that's kind of the levels that we got to this week. So kind of neat to see that we finally got back down there on the VIX. But this is a very important kind of level because typically when you get around 12, not to say that that's when, you see tops in markets or anything, but that's typically as low as the VIX will get. Has it gone lower before? Yes, it has. But typically that 12 and less area, that's about as low as it gets. It doesn't really typically go too much lower all that often. But very nice move there on the VIX this week. A little bit of drop off. But it's kind of interesting to see the VIX not drop off, especially on that Wednesday, Thursday. Take a look here at the DXY. As we were kind of talking about this week, kind of was mentioning like, hey, you know what? This thing needs to continue higher, especially after last Friday. You wanted to see it continue higher, break above the highs of last Friday. But Monday, we didn't quite hold it. Tuesday, I was like, man, this better bounce on Wednesday or very soon, because if it doesn't, it's going to roll over sharply. And it did. Wednesday, when we got the FOMC Fed stuff, dropped off there very sharply on Wednesday and Thursday. Nice bounce back day, though, on Friday. And did not hold under this lower wick that we put in at the end of November. So that's kind of an interesting spot. I think you don't want to be bearish on the DXY just because you're getting into a pretty major kind of support level. I think a lot of things have been in some pretty solid moves. So I think for the most part, you're going to want to wait. You're going to want to be very patient here. You're going to want to see how things set up. And we'll take a look at a few other things. But yeah, the dollar, I don't think you want to be just outright bearish here. Not a bad opportunity to probably go bullish down here. It's kind of like one of those, like, was this just a huge flush out? It very much could have been. So, I mean, yeah, it could be a pretty good opportunity to have gone bullish down here. Still not a bad spot to maybe try to go bullish because you have a pretty clear stop down below. And you can even put one down further if we start to make a really solid run on the dollar. Take a look here at the GLD and the gold trust. Obviously with the dollar, popping pretty good there on Friday, gold came down a little bit. But yeah, that pop on Wednesday, very good spot to be getting in. This is the spot you wanted to be getting in at the beginning part of this week. We kind of been talking about that. It's kind of that 62% retracement level right there on Monday, Tuesday, even the early Wednesday. Super good spot to be getting in. I think even if you get pullbacks here, you're gonna want to be bullish. You're gonna want to be bullish. I don't think you're gonna want to be bearish anything here on gold. So looking pretty good there, and we'll see how that shapes up as well. 10-year yield. Okay, so 10-year yield did not get the bounce like the dollar did as much, but it definitely got the drop off there on Wednesday and Thursday. Pretty solid drops there on those 2 days. It's moved quite a bit here over the past month and a half. Yeah, would highly recommend not looking to be bearish on yields. I mean, we're going to come into a pretty good consolidation that we had for about, oh man, 6-7 months. At the beginning of this year, to end of last year, beginning of this year. So yeah, I would just rather be a little bit more cautious on a lot of things, and that includes a lot of things where yields that are yield sensitive. A lot of things that are yield sensitive because a lot of things have moved and have had huge moves over the past like month and a half, and then even got blew off the top type activity. If you want to look at something, go look at the home builders. DHI. The home builders, yeah, go check that out. Past month and a half, they were screaming bullish, and they got up to all-time highs, and they blew it off this week. So yeah, I would be quite a bit more cautious right here. 10-2 inversion, nice little pump there on Wednesday. Nothing crazy kind of going on here. Looks like it might just still be in a pretty good consolidation. Not doing a whole lot. So yeah, we'll see how it goes. HYG, so this is kind of one of those things that also has made a huge move, getting to, kind of one of those support and resistance areas, right here around the 77.50 area where we kind of topped out back in February. Yeah, I mean, this is kind of what we're talking about, right? With huge moves over the past month and a half, getting into some kind of those resistance areas. If we continue to push higher, don't feel like you're going to miss anything. Let it push higher, let it break certain resistances, get it on the pullback into those areas, and then take that higher. Don't try to do it here, because if we reject, I mean, we could fall and take out all of the gains that we put in over the past month and a half. So yeah, just be patient. If we consolidate here, sideways consolidate, and then we push higher later, then okay. Then, you want to see that consolidation before the breakout. That would be okay to get in on. But if you break out now, that's fine. Just get it on the retest. LQD, same kind of deal. Didn't quite hold over that April high, but has had a huge move. So not exactly at a well-defined area. It is kind of into a couple of different top spots through the beginning of this year, end of last year. So yeah, I would wait as well. Look for something pretty solid. And take a look at the TLT. TLT, major resistance level here. I mean, this is a major support level for much of the year. And then once we got through there in August, I mean, this is when the bond market really started running up. We just screamed all the way up to that spot. So yeah, I would just be a little cautious right here, because I mean yeah, we're just right under it. We made a run to it, and if yields start to bounce just a little bit, then it's going to reject off of this. And I'd rather just see how it sets up, not try to say, oh man, look at that huge run, it's going to continue, but it doesn't, right? People are going to have time to think over the weekend, see what they want to do, see what they want to adjust, what has moved this week, what risks they want to take off, what risks they want to put on. So just be patient. All right, so taking a look here at the AAII sentiment survey this week. We got 51.3% bullish. We got 19.3% bearish. Now, it's been a few weeks since I've looked at this, at least on a recording. But the reason why I bring this up, because I actually pulled this data into a file, and this is what I wanted to talk about that I kind of mentioned early on. So this file, I was kind of surprised that they actually give you all this data. If you choose to download it, I did go ahead and do that. I actually added in some columns over here because what I wanted to do was take a look, because one of the things that you do notice on that website is we had a reading under 20 for the bearishness. That doesn't happen often. You see that we actually did that also 2 weeks ago. So what I did in that data was I actually pulled it in, but I actually excluded out a lot of other time frames, right? Bullishness had to meet, this kind of criteria. Bearishness needed to meet this kind of criteria. Bullish 8-week moving average needed to be about this kind of criteria. So what I was trying to do is I was trying to find like-minded scenarios in previous market cycles to see, also this bull bear spread, to see what happens, right? Typically afterwards. Now, what I did was I actually put in here in those different market cycles that meet those attributes. What is the next 13-week high and low, and then the percentage? What's the percentage from the high of whatever week this is pertaining to? So what I did is I actually took the average here. The average for the next 13-week high, 3.5%. Okay. Now the low is 6.3%. Now, one of the things that you need to be aware of is some of the data in here. There was multiple times where the data had, at certain tops where the data kind of came through like multiple times. That you can see here in 2004, you got back-to-back weeks there. So that's kind of some of the stuff I'm talking about. Is that roughly the same kind of time period? Yeah, I mean it's the same time period. It's a week apart, and even in 2004, you had 3 weeks that December in a row. So yeah, I just left all that in. It is what it is. You probably got some duplicates of similar time periods. But the other thing I would say is there's a lot of time periods in here where I would be more willing to exclude out due to the simple fact of kind of how deviated we are or not deviated we were from the long-term exponential trend line. Now that trend line is very important to me because typically you don't grow anything in the economy in any aspect of society or life or economics or biology. Everything's kind of steady at a exponential kind of trend kind of growth rate. And if you're in a time period that is not similar, then that is one that is kind of difficult to say it's going to it's going to stay the course of over being that exponential trend line, right? You've seen me talk about this before. The blue line here is the exponential trend line that we've had on the market, and this goes all the way back to the 1933. So yeah, I mean we're still deviated well above it. And so if we took into account all those examples of us being deviated above it and the data we were just looking at, we would probably exclude out a lot of other ones. But what I was just kind of mostly trying to gather from that data from AAII was really, what is the risk reward going forward? Are we going to be screaming bullish, or are we like about to fall off a cliff? Obviously, the crash of 87, that registered here, and this actually registered a couple of times, but I took out a couple of those because that was such a huge move that you didn't want that registering like more than one time. So yeah, I don't think like you're want to dump in head first here, because I don't think there's a lot of bullishness, right? We saw it was like a 3.5% average bullishness. Well, 3.5% average bullishness, that would be all-time highs, but it would be up into maybe like the 490 area. Let me get this off. Let me be up into the 490 area or something like that. Mid 480s. So that kind of maybe jives with some of the things I was saying last week, that maybe we do make a run here towards the end of the year. We get up into the all-time highs early next year. Maybe we hang out for a little bit, and then maybe we start to come back down and do something like that. Very possible. There was a lot of readings where they registered back in 2015. So yeah, there's definitely different time periods and where very similar sentiment survey data also registered like that. So yeah, it's kind of a difficult one where I don't think it'd be the best time to go bullish, but it's a great time to probably just sit. There was a lot of time periods where a couple weeks later we did have some snap downs, like 10% snap downs, which maybe we see those. There was one time period where like a week later we dropped 10%. The week after that we popped 9%. So basically like evened out on those 2 weeks. So yeah, it was kind of interesting to look at that, some of the different examples throughout some of the data and how the charts kind of looked with some of those different time periods. So yeah, kind of neat. RSP though, huge move this week, especially on Wednesday and Thursday, taking out the highs that we put in I mean, definitely all year, 52-week highs, at least year-to-date highs. Highs going all the way back to, well, April of 22. So it's been a little bit over a year and a half since we've been to this price level. And we did it all in one move because we were at some lows, man. We were way down here. Huge move. How far have we gone here? We've gone up about 18.5%. 18.5% up to Thursday's high from that low that we put in late October. So yeah, huge move. Look at all that volume coming in on Thursday, taking out a lot of stop losses. I'm sure that have probably been there at some of the yearly highs before. So yeah, pretty good to move there on the RSP. DIA, the Dow Jones Industrial Average. If you didn't hear, the Dow Jones hit all-time highs this week. So I zoom out, you can see that early 22 high. Yep, we took that out on Wednesday. Very strong, nice volume that came in. Thursday, Friday especially. So yeah, just expect us to pay a dividend on the Dow Jones this next week, and we'll see what happens going forward. I think you're going to want to see some resting MACD stochastics on basically all 5 of these ETFs are pretty much pegged. There's no point to really even look at them. The stochastics are really, really high right now. And that's the thing, is like basically all of these markets are showing hugely overbought type of condition. IWM, hugely bullish move. We already kind of looked at that a little bit earlier, but yeah, you can see that move there on Wednesday. Man, huge move there on Thursday as well. Nice, huge gap up. Friday, kind of a little bit of a pullback day, but yeah, look at that volume for the past 3 days. A lot of comeback there, taking out the high from back in August and earlier in the year back in February. So yeah, new yearly high there on Thursday as well. And it's been a little while since we said that. All the way back. August of last year is about the last time we got to these price levels. So yeah, nice move there on the IWM. Qs, take a look at the Qs. Though the Qs actually lagged behind this week, if you wouldn't believe it. Well, it's kind of hard to say that because Monday and Tuesday they actually did pretty good, but Wednesday and Thursday, once we got to the Fed time, big tech really kind of lagged behind. They didn't do a whole lot. They weren't doing a whole lot. Friday they did okay. They were definitely leaders of the day. It was just kind of weird. And this is another thing, like going back to about the middle of November, Qs have not been leading the market like they have throughout much of the year. They've been kind of just okay. They've just kind of been there. They've kind of been participating, but they really haven't been leading anything. But we are very close to the all-time highs. Taking our current price level, I mean, we're within 1%, 0.85%. So yeah, we could easily get the Qs to all-time highs in the next, trading session, honestly. But a little bit extended here. You can see huge, difference here between our current candle and the moving averages. Do we consolidate here before we push higher? I doubt it, honestly. I think we'll probably come out early next week. People will probably hear all the news of like the great bullishness and blah, blah, blah. Come out, buy it up Monday, Tuesday, probably push higher. SPY, we just took a little bit of a look at the SPY. But yeah, they got to that point that we were kind of talking about over the past couple of weeks, that 470 area, the zone that we had 3-4 tops here back in late of 2021, early 2022, right there. And then we just had one time period where we flushed through there. We got to 480 or just almost to 480, and that was the all-time high. And then we came back down, we rejected that one more time, and then we rolled over. But yeah, we got to that 470 level, this week, and it's kind of where we stopped. So it'd be curious to see how we set up. Do we consolidate here for a couple weeks and then we make a move higher to all-time highs? Be interesting to see. Just know that there's going to be some resistance. You can see a lot of the selling. Look at all the volume that came in here over the past 2 days, and people just kind of selling it off, taking the opportunity to lock in some profits. Honestly, I'm not sure. Like it doesn't even matter if you've been in bullish. Great. I'm not really one to believe this and believe in this run or new bull market or whatever. But it is that if you're riding it, you're just gonna keep moving your stop losses up, right? I'm not gonna get in now. I'll wait for something more significant of a pullback maybe next year, and that's just gonna be my game plan. That's all I got. So I would expect it to probably continue higher. So if you've been in, just continue to trail with probably stop losses, and we'll see what happens going forward. If we do get a lot of sideways movement, that also wouldn't shock me. So yeah, be interesting. A lot of bullish sentiment out there. Not much bearish sentiment. Probably a lot of cash in on the sideline. Really kind of flooding in, maybe especially on Thursday, Wednesday, Thursday. So yeah, we'll see. We'll see what it looks like next week. I would expect us to probably push one more time, at least one more time. So have a great weekend, Outfitters. Take care.